The dollar is dead. Hi, I'm Brian. If you're holding on to dollars and they're sitting in your bank account, you're probably losing money. Why? Because of inflation. Let's discuss what you can do to protect yourself and your hard-earned money. So before we get started, if you don't mind, hit that like button down below. It helps push the video out to more people. I would greatly appreciate it. If you have comments, leave them. I'll get back to them as soon as I can. Let's talk about 3 different things. First of all, I'm doing this every week, and essentially this is what I call the dollar is dead. So therefore, what can you do? You can put it into alternative investments. And that's what we're going to talk about every week and look at the prices of those. So 3 things. Let's talk about my take on the dollar. Let's look at economic stats. Every week they change. And then let's talk about the alternatives and the prices out there. So my take on the dollar, think about this. Things have changed greatly in the last, 3 or 4 years. How often do you have coins in your pocket? Or how often do you actually take cash out and use it? Now, you might be someone who does that, but for a lot of people, they don't anymore. It could easily just be your employer wiring money into your bank account. You use your debit card, you use a credit card, you then wire from your bank or ACH over to your credit, whatever it is. For all you know, it's just a bunch of numbers on a computer screen. So what is the dollar? The dollar is a currency backed by the United States government. There's many currencies throughout the world. And at the moment, the U.S. government is running a deficit every year, and the amount of debt that the U.S. has is going up, as you probably see all the time, at an incredible rate of speed. So what can you do? Well, those dollars that you're holding on to, if they're sitting in your bank account, you're losing purchasing power because of inflation. So let's say that there's the thing, let's call it a dollar, and that thing goes down in value. But then there's other things that you could possibly put it in, whether it be commodities like gold and silver or cryptocurrency, and those things may appreciate. So would you rather put your money, would you rather hold on to something that is going down in value or up in value? Obviously the thing's going up in value. Now, we don't know that these things are markets change, things change, but there are alternatives. And here's what's fascinating to me personally, is that I see, and my mindset has changed greatly after you look at, and I've got a video on gold over the last 100 years and how it's held value and the dollar's just lost value. So if you had held on to gold for a long period of time, you'd be in much better shape. Well, this day and age, things are frictionless. What do I mean? And why is it that people don't do this more often? Well, that's because in the past, it was very difficult. And by past, I mean 5 years ago, 10 years ago. If you wanted to buy gold, you'd have to go to a store, buy a physical piece of gold, and take it home. Of course, there's also now ETFs that have spot price of gold. So you can go on your app on your phone, go to your broker, buy an ETF in gold, sell an ETF in gold, like that. No friction. You don't have to go anywhere. It doesn't take your time. It doesn't take any effort. It is easy to do. Now, there are fees involved, but in terms of being able to buy gold and sell gold, in other words, take your cash and turn it into something else, you can do it like that. Then crypto comes along. It wasn't, 4 or 5 years ago that crypto was difficult. I mean, let's not joke about the fact that if you had used it in the past, I did. I have a computer science background, so I enjoyed getting in and trying to figure out how things work. So it didn't bother me that the interfaces were horrible and it was confusing. I just thought it was fascinating. But now, speed ahead to where we are 2024, you've got an app on your phone and you can quickly buy and sell crypto. If you can use a banking app, you can use a crypto app. So what does that mean? That means that crypto is now frictionless. So the ability to take those US dollars and convert them into something else and then use them as needed, it can happen in the blink of an eye. So now let's get into the stats of the economy as a whole. And we're going to look at 4 different things. This is the second part of the video. Then we'll talk about commodity prices. Look at this chart here on credit card debt. It's currently at $1 trillion. All right, you might think, who cares? Well, just 10 years ago, it was 600 million. So in just 10 years, it almost doubled. So U.S. citizens' credit card debt has gone up substantially. Car loans are at 1.5 trillion. In 10 years, they went from 900 million to 1.5 trillion. What's that, over 50% increase? That can't be good. Oh, and by the way, just 1980, which wasn't that long ago, they were only at 100 million. That is an incredible, that's 15x from 1980 to 2024. And even though I look incredibly old, I was alive in 1980. All right, now, personal savings. Personal savings rate to me is a real indicator of how things or how people in the U.S. economy are doing. So if you look at this, it's at 3.7%, meaning essentially of the money you have that you're able to use every month, 3.7% is saved. Now it might be turned into stock or other investments, but that's the rate. It was just 2012 where it was around 11%. And then during the pandemic, it was around 20%. And if you look at this chart, 3.7 is one of the all-time lows. It's been lower, but that's still incredibly low. So people don't have a lot of savings. They've got an incredible amount of car loans. They've got an incredible amount of credit card debt. And they also have student loans. Student loans are at $1.7 trillion, which blows my mind. And it was just 10 years ago, they were at 1.1 trillion. So in the last 10 years, the average consumer between credit card debt, car loans, student debt, it's through the roof. And their personal savings, they don't have much. To me, that's not good. All right, so let's look at commodities. Now, if we compare this to last week, I look at two different charts. First, I like this website. I'll put a link below because it shows gold and silver as well as some of the crypto. So gold is at $20.44, slightly down from last week. Silver is at $22.41, slightly down. Now, Bitcoin is up $500. And then if you look at altcoins, the number one being in market cap, Ethereum, it's up $100. So those two are up. Then I like to look at the U.S. 10-year Treasury note. Why? Because that's a long-term note, and that tracks with mortgage rates. You can see that it was just over 4% last week, and now it's up to 4.1. You can easily, through plans like Vaulted, or through ETFs, you can buy and sell gold. You can then, so you can convert those dollars into something else. You can easily, through these apps like Coinbase, send your money over to them and turn it into crypto. Use a debit card, which will pull from your crypto. There are alternatives to holding dollars. Now, a lot of people say something like emergency funds. Emergency funds, I believe, are very important, whether it's a 3-month, a 6-month, a 12-month, and that's cash. But I'm not sure that everyone understands that you don't need to hold that cash in the bank account. Personally, part of my emergency savings is actually cash in a sock drawer or in a safe. I've got a couple places. But what's more important is to note that, think about this. If your emergency fund is in a bank and banks have problems and say, you know what, you can't access your funds. Or, and that has happened in the past and that could happen again, banks are having issues. Or what about the case, and you probably read all the time, because I've seen many articles where they'll say, you know what, someone's money was fraudulently taken from their bank account. The bank doesn't know where it went, and it's going to take them a year or two through the legal system to get their money back. Well, if your emergency savings is in an account and the account goes away, that seems like it's an emergency, but your savings is gone. So if you have some cash, I'm not saying all, but some cash in your hand, tucked away somewhere, you may want to do that because you don't want to get stuck in the emergency being the bank that's holding your cash is your actual emergency. So what am I saying here? I'm saying that personally, I move dollars into alternative investments. Now, gold and silver move sort of slow. Their transaction costs can be a little higher, although ETFs aren't bad. Crypto is very easy to buy and sell and move around. Of course, that's very volatile. So you may want to just take, let's say, a piece of paper, make yourself a pie chart, and figure out how much you want to hold in dollars every month. And then some of these things, like I think of crypto and I think of gold and silver, more of a long-term hold, not something I'm going to need this month or next month or even 3 months from now. So I take a portion of the money that I'm going to save and I say, okay, this amount I'm putting aside. I have an emergency fund. That's done. Now, every month I'm going to put this aside. Maybe that will stay in cash. Maybe it'll be in my hand or in my drawer. Because I might need that for car repairs, new air conditioning on the house, whatever it may be. But then I'm going to take a little bit and say, you know what, little gold, little silver, little crypto. I might say 5%, 10%, 15%. You might say, just 1% or 2%. But please change your mindset and realize that there are alternatives. We have high inflation. The dollar loses purchasing power. And you might be better off holding things other than dollars. I'm not a financial advisor. That's my opinion and what I do. I'll do this every week so we can take a look at commodity prices and crypto prices. Thanks for watching.